Well, spring has sprung here in Australia, signalling what is traditionally a very busy time for the housing market, for the real estate market. And I'm thrilled to be joined by senior ANZ economist Adelaide Timbrell. Thanks, Adelaide, for your time this morning.
Thanks for having me.
Okay, let's get straight into it, Adelaide. So, what indicators are you watching closely as we head into this selling season?
So there's two things we want to look at. First is how has housing market momentum been going? And how it's been going is that we've seen more housing price growth than usual, 0.8% just in the last month. And we've also seen higher auction clearance rates, which means more homes that go to auction are actually getting sold, which tends to be a good sign for housing price growth going upwards. On the economy side, we're looking for how much money people are making, how much people are saving. Those two things create borrowing capacity, right? So the more of a deposit you have, the more you can bid on a home, and the more borrowing capacity you have, which is helped by lower rates, lower taxes, and higher pay, the more you can bid at an auction. All of these things are going in the right direction.
Okay, so with that in mind, are you forecasting that this spring could outperform other years in terms of sales volume?
What we see this year compared to the last few years in the economy is that on a per person basis, we're actually moving in the right direction. So that's going to create a little more risk appetite for people to actually bid a bit more. We've also got lower interest rates than we did last year, which means that per dollar of income, people can borrow more and therefore bid more. So these are all really positive signs coming into this particular selling season.
Okay. The federal government has recently announced changes to its first home buyer scheme, removing certain limits for first home buyers. How significant is this decision in helping first home buyers get into the market?
So, for first home buyers, the deposit rather than borrowing capacity tends to be the limitation. Most first home buyers, just based on the income, can borrow quite a lot more, except that they don't have the deposit to get that 10 or 20%. Now that they can do 5% for a lower value home, that is going to allow more people into the market more quickly, which could mean a little bit more competition for homes under that price threshold.
And you just answered it, I guess, but how could it shape the rest of the market?
It will add some competition in terms of those, $500, $600, $700,000 homes. It's not really going to do much for the market anywhere above that, though.
Okay. Look, there is no doubt affordability remains a major hurdle, and you recently noted that it takes 10 years on average for a household to save for a home. When it comes to the most recent data that we've seen, are you seeing housing becoming any more affordable for the average Australian?
So we expect that housing prices over Australian capital cities this year versus the end of last year will be up around 5%, and then they'll be up around 5.8 to 6% next year. That's moving more quickly than the average person's income, which means housing is getting less affordable. So even though mortgages, per dollar of mortgage are becoming a little bit cheaper to service because interest rates have fallen, and people don't have to put as much of a deposit down. So in some ways it gets a little easier. But the big thing is price. Housing prices are so expensive. They continue to be, and they're getting more expensive more quickly than we're seeing the average person's wages.
Yeah. Um, and finally, we have seen rates stabilise this year, as you just mentioned. How are current interest rates influencing buyer and seller behaviour?
So we've seen interest rates fall by 0.75 percentage points this year so far. We think that there will be another 0.25 percentage point fall in November and then nothing after that. What that does is it reduces people's minimum mortgage repayments for the same amount of debt, which means that when people go to apply for debt, they can actually borrow more. That means that there's more competition at those higher prices for auctions. But also, people who already own a home, it means they have a little more margin in their budgets to spend on other parts of the economy, which keeps other people in jobs, it keeps business investing, and it helps our economy grow.
Adelaide, thank you so much for joining us, and we really appreciate your insights.
Thank you so much.